Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Kickstart video. Today's date is May 13, 2024. In the Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar from a technical perspective. So let's get started. I'm going to start with taking a look at the euro versus US dollar. I'm going to use a 4-hour chart as my basis for this analysis. And what we can see from a technical perspective is going back in time, the price moved above this green line back here. This was the unemployment day in the U.S. And as you can see, the price moved above that 200-day moving average. That's a green line right here. It spiked to the upside, and then the next bar came down and used that 200-day moving average as resistance and moved to the downside. In trading last week, the price came up to that 200-day moving average and found early sellers against that level. Also, near that level is the 50% midpoint of the move down from this high right here. This is the March high to the low price that we found right here in April. And that 50% retracement level and the 200-day moving average proved to be a solid resistance level in trading last week, and that's where the market stalled its high before moving to the downside, closing down here. And trading here this week, what have we seen so far? We've seen a rotation to the upside in the early hours of the U.S. session. We've seen a move above both the 200-day moving average and the 50% retracement. That level comes in at 1.07906, and that level is now going to be support for the day, a key support for the day. As long as the price can remain above that level, the bias remains more to the upside. If the price were to move back below that level, the bias would shift back to the downside. So this level right here, 1.07906, is a key for two separate technical reasons and two separate key technical reasons: 200-day moving average, 50% retracement level. Now this swing area right through here, which goes back to this time in February, comes up to 1.0804-ish type area, and that's going to be the next target to get to and through. And if we get above that level, we'll start to look toward the 100-day moving average. That's a blue line in this chart, and that comes in at 1.08272, followed by the 61.8% retracement of the same move to the downside. So that's how the euro versus US dollar is perceived right now from a technical perspective. Stay above 1.07906. Let's take a look at the dollar versus yen. In this case, we're going to take a look at the hourly chart for this currency pair. And when we look at it, you see this 50% retracement level. That level comes in at 156.029. Just below that level are the high prices that we saw. Again, this is an hourly chart, so this is going back to last week's trading. So this is Thursday and Friday's trade. And trading here today on Monday, we've seen the same high coming in around the 155.95. So there is early sellers against the 50% retracement level on a number of different occasions, a number of different days. As long as the price can remain below that 50% retracement level, the sellers are in play. I'm not saying they're taking back huge control because you can see the downsides have been limited with more or less higher lows, but it does keep them in play. What needs to happen is that the price move back below the 100-hour moving average. If it's able to get below that rising moving average, then the bias would shift more in the direction of the sellers, and we could see further probing to the downside, including the 38.2% retracement of this move to the downside. This is off of the highest level going back to 1990. Down to our low price that we saw in May. So getting below that 38, that would be the 38.2 would be the target, followed by the 200-hour moving average. That's a green line in this chart. But until that gets those levels get broken, the bias remains more to the upside. But we do have that 50% as a key target on the top side to get to and through. Finally, let's take a look at the sterling versus US dollar, and similarly to the euro versus US dollar, we're breaking above the 200-day moving average. That's a green line in this chart in early U.S. trading. That level comes in at 1.25413, currently trading at 1.2553. In trading on Friday, the price came up to that or toward that 200-day moving average and found willing sellers. We have other cluster of moving averages through here, including the 100-hour moving average, the 200-hour moving average, the 200-bar moving average on the 4-hour chart. Those are these three moving averages. Down below that, we have the 100-bar moving average on the 4-hour chart. So lots of moving average support down below. And in trading on Friday, we traded above and below all the, or at least these three moving averages. And trading today, we're being able to stay above the lower of the three at least, that being the 100-hour moving average. So buyers are taking a play, and getting above the 200-day moving average is obviously an important hurdle that if it stayed above that level, it would be more bullish going forward for this currency pair. So be aware, be prepared. So that's my look at the three major currency pairs to kickstart your trading week. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.